every business owner I know wants better data, wants to be able to have this ability to draw insight and make really good decisions. But at the same time, they're not recognizing that it starts with the books. And
Yep.
absolutely, your financials are the most critical metrics to be tracking in a business. Now, Matt, I hope you're prepared now. What have you seen? What have you seen? What are the most common sins or mistakes you're seeing in the books?
The most common sin, and we've all been there, we've all done it, is using your bank account as your financials. So your bank account goes down, you got to do something, your bank account goes up, look at me, thump the chest, I'm the best. That is the cardinal sin. Like, bank accounts can fluctuate day to day, week to week, month to month, year to year. But just because your bank account goes down doesn't mean you're losing. Just because it goes up doesn't mean you're winning. It all comes down to timing. And that's the biggest thing of financials is timing. But the biggest sin is not talking to your bookkeeper. Grant, your example, perfect example of it's 5. I've been into clients and there's 300 transactions to reconcile, but that's 2 days worth of transactions. So it's like, it doesn't really matter. Like, you can't just work on that one thing. And you know that now and happy to go back. But having that information and having that knowledge about who your bookkeeper is and what they bring to your team, and I use that word very heavily, team, because they are part of what you do. They should be. But the biggest sin is not utilizing them to their capacity as well. Like, they know.
Can I lean into that? How should a business owner work with a bookkeeper in this example? Because I feel like there's a mismanaged expectations. Like, every business owner I know, when they work with, I'll say particularly bookkeepers and accountants, they seem to believe that the accountant and the bookkeeper should be guiding the process. You should be telling me how my reports should look. You should be telling me what to track in this. And then if I, with the power of hindsight, I feel like the bookkeepers and accountants are almost wanting to hear that feedback from the business owner. Like, what would you want to track?
Yep.
What are your goals in these things? So we can highlight them in your report. But no one ever talks to each other. So in turn, what we end up is with shitty reports that don't get read. And then business owners that don't know how to read their reports as well, which I think is really fascinating. So break it down for us. If I was working with a bookkeeper, and I realize this will be different depending on the business type and size and all the rest of it, but what is an ideal format? How should they even approach it?
It's communication. Like, the biggest thing is communication. Open communication between yourself and your bookkeeper has to be there. Now, whether you communicate daily. Personally, I don't have time for daily. If you have 50 clients, you just don't have time. But you should be communicating with each other at monthly minimum, because that way you can then go, okay, guys, let's get feedback on what's happened. So with numbers, and this is part of my experience as an auditor for 20 years, is I've lived in the past. I live in the past and I plan for the future. There is no today as an auditor. As a bookkeeper, I have that. Now I can work on today. So we can make better changes. We can get better information on a regular basis, on a monthly basis, and get more information from you about how to change what you're doing to make better returns to get to your goal. And that's
so
the
when
bottom
you say
line.
Communicate monthly, right? So let's say someone's like, cool, I've got a bookkeeper. I'm going to book in time to speak with them or email with them or message with them, whatever's appropriate in that relationship. What are they actually discussing here? Or what are they trying to do to actually work together here? Because again, I just want to unpack that more deeply, because I feel like a lot of business owners could just book in a meeting and then it'd be a complete waste of time.
Yeah, 100%. With that, there's two forms. So for me personally, I can't speak for other bookkeepers. For me personally, is I want to give you feedback on how you've been going. So we look at some data and metrics about what you're doing. So I will sit down with each client and go, what do you want to know, and when do you want to know it, and where do you want to go? So we can go, okay, we achieved those. We set 5 goals. We achieved those 5 goals. No, we didn't achieve those 5 goals. Why not? And then the business owner comes back to me and says, well, we didn't achieve this because of this. We did this. I changed this. One client didn't pay, so therefore our income is down. I want to get, minimum 20% income, of my goal. It's like, or I want to get 20% return on investment. we got 16%. Why? Okay, one client didn't pay. Okay, we'll look at next month. Next month's going to be larger, so we'll bring that into we'll work that out as we go along. So some months might be larger, some months might be smaller. But they need to communicate that information back and forth. So as a business owner, you should be saying, hey, this is what I want to know. And if you don't know as a business owner, and I'm speaking to everyone out there, if you don't know, ask me. What should I be tracking? What should I be looking at? What should I actually know? And we'll work with you and get you that information and go, okay, return on investment, that's the biggest thing. I'll use a quick analogy here. So, and I think it's quite appropriate. If you're investing in Facebook ads, let's say, for example, you're investing $1,000 a month, $12,000 a year in Facebook ads, and your business is growing and you're getting good returns, you're getting good information, but your traffic is coming from Google or YouTube. But if you don't know what that return on investment is for the Facebook ads, you won't know that you've just wasted $12,000.
Maybe it's better they don't track it, so they don't because to get that insight. But that's a really interesting insight, and it just brings up this idea of how different it could be, right? I used a diet analogy at the start, right? And I will continue on that path. A diet that supports someone that wants to gain 10 kilos versus a diet that wants to support someone losing weight has very different metrics.
Absolutely.
And it is quite interesting, right? Because I've been doing business for a very long time, and I can follow my sword very well because when I was very green at this, I'm okay. I'm not a perfect person, although now I'm pretty good at business. I like to think, Charlie. I used to look.
I'm shaking.
I used to look at as my bookkeeper as a subordinate to my accountant, and that was how I looked at like that team. Right, which was the bookkeeper did what the accountant wanted them to do, and then I would talk to the accountant to the extent like I had bookkeepers that I never had a conversation with. It was a transactional relationship to me. It was, and this was like a decade ago, right, where I'm just like, cool, you just talk to the accountant. If the accountant needs something reconciled, happy days. But then my accountant will do the review to make sure that you've done the quality that you need to do, right? And I love the fact that you're sitting there saying, well, no, the better way to operate with a bookkeeper is that they are essentially the ones bringing you the scoreboard based on the game that you're looking to play. And I will fall again on my sword, which is like 10 years ago, I actually would not have thought of the questions to direct to a bookkeeper. So it's almost like your point, Charlie, of just going, well, I'll just log into like a Facebook ad account and I should be able to figure this out myself, as opposed to going, yeah, but what are all of the costs and how does all of this factor in? And so I concur that it took me a lot of pain to actually recognize that, hey, no, I need to talk to my bookkeeper more often because they are the ones who can provide me the data quicker, easier, and faster, but also change sort of the reports that I'm looking at. But also then found out that they are not a subordinate to the accountant. They are a subordinate to me, and they're at the same level as an accountant. The accountant just provides me different reports. And so that was one of the biggest things that I found. Like, if you were to try and draw a line down the sand for us, Maddie, and this is a very pointed question, what difference in reports do you think a business owner gets from a bookkeeper to like an accountant, for example?
Basically, the bookkeeper will give you similar reports. So the accountant can give you a balance sheet and a profit loss and a cash flow statement. They will give you that information, but they will use that data for other purposes. So they'll use that for BAS, they'll use it for PAYG, they'll use it for income tax, they'll use it for that side of things. Bookkeepers will use the data, same information. We all use what we call the centralized general ledger, and that's what Xero and MyOb Online and all that sort of stuff allows us to do. But we use it for different things to make decisions. So accountants will actually allow you. We'll give you advice if you want them to say, hey, you looked at this, you save tax this way. Can you do that? Yes, that's their job. But bookkeepers allow you to change. I put it down to a steering wheel or a rudder on a ship. The accountant and the bookkeeper both have one hand on the steering wheel each, but they work together all the time, but using different sides of it.
Hey, fellow business owner, if this topic and value-packed short video has resonated with you at all, and you want to dive deeper into being a full stack business owner, check out the full episode by clicking the link on your screen or in the description right now.